Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
In today's news, we have some things to share with you guys. Today, we're actually going to talk about the biggest news article to hit, which is what not to do when you buy a house.
Dun, dun, dun.
Thank you. And we have in-house, what are those called? In-house percussions and effects. That's cool. So guys, today me and Sasha are here to talk to you about some simple stuff. And the simple stuff is this. What do you not do when you go and you buy a house? Or for that matter, what do you not do when you actually refinance your property? And I'll be honest with you, it's a 50-50 gamble. Some of these clients, they think they can do these things. And other clients, they just... they live a normal life. They get it done. They don't make these changes. And these changes that I'm talking about, they affect your approval. So, Sasha, why don't we go through the list quickly and then we'll dive into that list as well.
Absolutely. First one on the list here is don't change jobs.
How?
Don't change your job. And if you want to know why, I mean, you have to show stable income. They're going to want to check that. Some things about your employment. You shouldn't be on probation. You know, if you're part-time, they're looking at a 2-year average. So you should have 2 years history if you're part-time.
Yep.
And don't change your job before it closes.
Now, I would say this. I'm gonna be the typical bore here. But what if I did change my job? Like, what are you gonna ask me if I did say, hey, I changed jobs? What's your biggest question, right?
Okay, Duncan, are you on probation?
No. I went from being a self-employed electrician to being an employed electrician with an electrician company.
Perfect. So you are in the same industry then.
I am, yeah.
Okay. I mean, as long as you're not on wait, are you full-time?
Let me check my pay stub. No, the main thing there was Sasha, what he's saying is industry. So I'm not going to lie. If you do change jobs, you most likely, what Sasha's saying, you're going on probation. I have it right now with a client who wanted to use his probationary time period to buy a house. You can't do that. You got to wait till you're fully off probation and you're still on the job, because during the probation period, the employer can get rid of you without cause, meaning they can fire you without cause. They can say, listen, it's not working out. The market's not there. We no longer want to employ you. So that's one of the biggest things. Do not change jobs. Next one.
Don't make major purchases.
How?
Why are people buying cars before they close their mortgage? You got an accepted offer. You got it maybe a month before it closes, and you thought you should go and buy a brand new Volvo? Why? Why?
So I'm going to be the borrower here again. I'm going to be the borrower, okay? I was very stressed about the purchase I've made on a house. And I wanted to, with that $500,000 purchase price, I got really squirrely, and I wanted to go buy some for $80,000 just to make myself feel better.
Yeah,
right.
I get that. I get it.
Yeah, right. Now there is exceptions. Okay? The exception would be, I've told, Sasha's told me, Duncan, your ratios are really dang low with this $500,000 mortgage.
Sure.
You make $250,000 a year.
Yeah.
And this mortgage only takes up 10% of your total GDS TDS. And if you want to know what that is, go watch our other episodes. We'll talk all about GDS TDS, but you have that much room. I would say most times me and Sasha are sitting there going, hey, your ratios are so low, you can afford that $80,000 purchase you're looking at. So go right ahead and go buy that car. But I'm going to say for 99% of us, you can't. You can't go buy a big, massive car. Please, I get this. Listen, I would rather you live in the house without the new furniture. I'm not lying. I'd rather you get, you got your rate. Sasha said it. You put the offer in. You've used the lawyer, the realtor. We got us, the broker. You have the insurance agent. You have all these professionals that have just done a bunch of work for you, and your ratios are tight, and you went to Tepperman's.
Yeah.
And you bought the new bed frame for $6,000, the new couch, furniture, and sofa it's really nice. Actually, you should check it out. It's a really nice sofa. But you went and bought all this stuff and you tacked on $15,000 of your debt, in which case it throws out your ratios. Now, the next question I have is, what happens internally on the lender side then? Like, do they check bureaus or?
So yeah, I mean, they usually do a pull before it closes to make sure that there has been no major purchases. So, I mean, I've had it recently too, where the guy, thank God he checked with me, but he wanted to go and do what you just said. He wanted to go buy all the new furniture and all that stuff. I guess the house needed a fridge or something. And like, I get it, but you can wait 24 hours after closing to go get all that done. And I'm pretty sure Teberman's has same day delivery these days, don't they?
They do. And I'm pretty sure, by the way, Facebook Marketplace has like a really good deal on a fridge. Like, I'm not gonna lie. Come on, man.
True.
Like, and you can't finance through Facebook Marketplace. So if you go buy this cash, or if anything, go borrow money from your mom and dad if you can, or talk to a friend and say, hey, can I borrow a couple $1,000? I'll pay you back later. But in essence, guys, let's just try and buy a house with a fridge already in it.
Yeah.
The next one is just take the furniture with you. That's my biggest thing. All right, Sash, let's talk about this next one.
Don't miss payments.
Pow!
Missing payments, it's not a good thing. If you feel like maybe you're a little bit tight this month and you can't make that payment, make a call to the servicing of the lender. They want you to be successful in your mortgage. I mean, yeah, let's face it, they want to get paid too, but they also want your success. I would say it's probably a 60-40 thing with the lender, but call them. They'll take care of it. If you let them know that you are facing hardship this month, or maybe you lost your job and you need a couple of months of relief, there are ways around it. Just let them know. Communicate.
Yeah, so I was going to say there, like really at the end of the day, if you've lost your job, that is a change in your job and you can't get a house in that case. And what I would say here too is missing payments. So there's this big misconception that, I didn't pay my $1,000 balance, minimum payment of $30 on my credit card so I could pay my car payment. I will tell you right now, historically, a lender is going to look at a $400 car payment and say, hey, it's understandable there's a missed payment on that car payment, but why the heck did he not pay his $30 to his Visa card? That's the biggest thing, because it leads to behavior.
Yeah.
And what the lender's going to look at is go, oh, this guy's not really organized in his debts. Is he unorganized everywhere else? Should we approve his mortgage? So when it comes to missing payments, really at the end of the day, guys, there's a reason. And you have to explain this reason to us. When we see missed payments on the bureau, explain to us what happened. Now, there's this beautiful thing with the missed payment, and we're going to call it out, and it's called isolated event. Okay. I think it was a movie back in the 1990s. It was pretty cool or something like that. But isolated event, what is that? Well, if you have all perfect credit going on in your bureau and you have this one credit card that has missed payments, maybe it was the online banking screwed up the payment that month. Maybe it was, it didn't get pulled out properly, or you changed bank accounts. Isolated events come in where we use that saying and say, listen, Mr. Lender, he's perfect in all of his other facilities on the bureau. He just has this one credit card that's been missed, or has some previous missed payments. And here's the reason behind it. And if you notice what I said, reason behind it.
Yeah.
So if you do have missed payments, let us know, because no joke, man, we're going to find out anyway.
Yes. And I totally misread that one. I was thinking of mortgage payments.
Yeah, I figured you did. That's okay.
But
if
great
you are
save.
missing your mortgage payment, to Sasha's point, don't go get another mortgage, okay?
Yeah, don't do
but
it.
we do have a solution. If you have missed mortgage payments, I'll jump on this. If you do have previous missed mortgage payments, oh my gosh, does it hinder you?
Yeah.
The lender will not renew you these days, and you're really going to probably increase your rate. You'll probably have to go private or a MIC. Sometimes B lenders are okay with it, but there's got to be a really good excuse as to why you missed that mortgage payment. It's one of the biggest follies of this whole system, that if you miss a mortgage payment, there is no more compassionate lending saying, oh, we understand that he missed 3 months payments. No, it's not a good thing, guys.
Yeah.
All right, let's move on to number 4.
Don't withhold information.
Bow.
Being upfront and honest about your financial situation is the best thing you can do, because like Duncan just said, we're going to find out anyways. And if there's something that we don't see, for example, if the lender pulls your TransUnion and we've only pulled your Equifax, and so I'm dealing with this right now where there was a personal loan that didn't report on Equifax, but then the lender found it on the TransUnion, and it totally screwed up the debt service ratios. And you can check out our other episode about debt service ratios there.
Dang TransUnion.
Yeah, like we'll find out. We're pulling the bureau, we're sitting down, we're discussing it, we're reviewing it, and then the lender is doing the same thing. So if we miss something, they'll catch it.
Yeah, and it's like to Sasha's point here. Sometimes I forget that $40,000 loan I have, Sometimes like, oh my God, I forgot about that 40 grand. I owe. Guys, let's be honest. You got to know your debts that you have. So we do ask you. And one of the biggest ones I got, bone of contentions, is what houses do you own? And they send you the 3 houses, but you actually own 2 other additional houses. Guys, I'm not gonna lie. We're gonna find out. And I say me and Sasha repeat that in unison. We're gonna find out. Because at the end of the day, we're brokers. It's our job. And it's not our job to sit there and judge you for not telling us. But we get kind of a little bit like, why the heck didn't this guy just tell us? Because the more you tell us up front, the more we can gauge what we're actually trying to tell, how we're going to get the approval. We can throw it into ratios. It's just the more and more you tell us up front, the better. We don't need blood samples, right? But we need your financial history. We need job letters. We need the houses you own. We need the debts that are not showing on the bureau. So if you think you're pulling a fast one because Equifax doesn't show it, the lender's going to pull this TransUnion. And TransUnion pulls across North America, not just in Canada. And that's what happens. It pulls a lot more details out. And TransUnion goes back 10 full years, whereas Equifax only goes back 6. So we're pulling one to gain kind of access knowledge. But honestly, if you forget about the $40,000 loan, what says you don't forget about the $300,000 mortgage you have? Come on. That's where we're at with that. Yeah. All right, next one, Sash.
Don't apply for new credit. Pow! Applying for new credit, like when you're doing your application before your stuff closed, like we've already mentioned it, they're going to pull the bureau before it closes. They're going to find out if you got a new credit card and you racked it up. So too many can drop your credit score. That's true too. So if you keep applying for different credit cards or different types of credit, then it's going to reduce your score. For example, go buy a car. I'm sure most of the people watching has bought a car before and then checked their score and it went down like 30 points, because the way it works in a dealership is they take your SIN number and they put it in their system and it goes to all the lenders right away.
Yeah.
But in the mortgage space, and you can check out Equifax for this, we can pull your bureau as many times as we need to for up to 45 days from the first initial pull, and it will not affect your score.
Yeah, so this number 5, guys, just by the way, is a kind of a double up on don't make major purchases, because the major purchases section is you financing those major purchases. Yeah. I would say quickly right now, if you apply for a credit card, they are going to know. They're going to find out. And I'll tell you another thing that happens, and I've seen this happen in my history. Client has a 650 Beacon score or credit score or FICO score, 650, and he goes to Canadian Tire and he applies for a $10,000 credit card limit. His bureau drops from 650 down to 598. And the lender goes and pulls the bureau before they actually go and close, and booyah, you're no longer eligible for that beautiful 5% down rate. You got to go 20% down. It has happened, guys.
Yeah.
So I'm just letting you know, applying for a credit. Now, what you would think is there a difference between a mortgage pull and a credit card pull? Or a retail pull? Oh, yes, there is. Our actual mortgage pull does not affect your bureau. We have it for 45 days, and we can run it through as many times. And I'll tell you right now, from my own experiment, I have pulled my credit score up to 15 times in one day, and it does not alter it. Now, if I went to Canadian Tire, then I went to HomeSense, then I went to Michael's, and then I went to some other store I can't think of right now, and everywhere else, and then went to Zehrs to put my groceries on a credit card, which you need to do these days. Then what would happen is you would notice 100 points, if not 120 points, drop in your bureau, and that's from the initial pull, because what they look at is saying, "Oh, this guy's seeking credit."
Yep.
They don't care about seeking a mortgage situation. So we're coded as a mortgage, and then there's retail pulls too. And I want to mention one last one. I know Maddie did up this beautiful list. Thank you, Maddie. There's one more situation on here, which is the social media. Right? So one thing that we don't want you doing before you close on your mortgage is going on to social media. And you've told us, which is beautiful, you've told us you're moving into this. But then you go and you post on there going, brand new rental for students.
All
right.
I wasn't expecting that. Yeah.
Brand new
wow.
rental for students. Come on, walk in. Or this is my new party house and we're going to wreck it to the studs. Or this, you know what? I'm looking at it. I just bought this house and I'm going to tear it down to nothing and rebuild a different one. Guys, any of those situations, honestly, if you're going to do that, don't come in and get approved from us. Like, there's no point. But if you let us know, we have proper lenders that are going to allow you to do that kind of thing. But if you are going to do that, why don't we keep it off social media? Why are you going to social media to say all that? And the next one is just, it comes down to character. So I have actually had a past client because of his character online, and it was specifically a website and it was social media, Facebook. The lender decided to pull the whole deal based on his character, that situation.
Wow.
So just know that, guys, the lenders are going on social media. They're checking your stuff out.
Yeah, they are.
So maybe if you are going to wreck your house, again, don't come to me because there's no point. I want you to keep it and move into it. And if you're going to flip it to a rental, let me know so I can get your proper rental rate. Because if you move that and change that to a rental, that lender is going to come and pull that loan. That's what's going to happen, guys. So either way, that would be number 6. I know it's not on here, but I just want to mention that. Like, lenders are checking social media. They're checking everything out. Would you not, if you were lending $500,000 on a property, are you not going to try and check everything possible? And not just $500,000 at the lowest prime rate possible. Right? So there's risk there, guys. And lenders don't want to take that risk and have to go through all this and deteriorate what their asset is. And their asset is your house. Okay, guys?
Yep.
So that's the last one. Sash, you got anything else to add?
No, I mean, just, be totally communicative with your mortgage agent or broker. Let them know everything what's going on. Be honest, be upfront. We're going to find everything, and if there's something that we miss, the lender's going to find it. So just be honest, be upfront, and, let us know the situation. The more honest you are, then the more time we have to figure out your situation. So it's all about communication.
I agree there. I was going to throw in a pow. Don't change jobs. Don't make major purchases on credit cards. Don't miss payments. Don't withhold information, and don't apply for credit. And, watch your social media, man.
Yeah.
All right.
Yeah.
Other than that, guys, appreciate it. And Maddie, is that a wrap? We're good?
That's a wrap.
All right. How?
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.